February 21st, 2026. We're going to go over the trades I took today, and we're going to talk about the week. And first, we're going to talk about the strategy. What this strategy is it's taking multiple time frames and aligning them in terms of momentum. As you know, momentum changes the probability of the future. It creates an asymmetrical cloud of possibilities. In the realm of possibilities, it creates an asymmetrical cloud. That's what momentum does. We all know this. If something has a lot of momentum going up, everybody intuitively knows that the probabilities that it's going to continue to go up in some manner are higher than 50%. Much higher than 50%. So what we're doing is we're trying to align harmonic time frames. So if this is a 2-minute time frame, and this is a 3-minute time frame, and this is a 4-minute time frame, well, those are too close together, and that's not going to create much harmony, and it's not going to stack, and it's not going to create constructive interference. And constructive interference is a phenomenon that happens in this universe where if you have things, frequencies, or energies, if you have frequencies lining up at the same moment in the same direction, that's going to increase disproportionately the amount of energy, the amount of output, the amount of efficiency. So when multiple forces align, it creates another asymmetrical quality in this universe, not just with financial markets. This happens in many realms. So what this strategy is doing, the basis of this strategy is it takes, for example, the 30-minute time frame, and then it takes the method that I'm using currently, the 15-minute time frame. This used to be the 5, right now it's the 15. And then a lower time frame, like a 2 or a 3, or maybe even a 1 minute, or maybe even a 5 minute, a lower time frame. So we have a lower first order, we have a middle, and then we have a higher final. This creates a triple time frame alignment. Now, what we're doing is we're trying to align the momentum with regards to the MACD, because the MACD has a histogram, and the histogram goes up and it goes down, and it tapers and it stagnates. And the MACD histogram represents momentum. That's what it represents. It represents the change in the speed. So the change, the speed of the price movement. So we take the MACD of the 30-minute, and then we take the MACD of the 5-minute, 15-minute rather, and then we take the MACD of the lower time frame, 5-minute, 3-minute, 2-minute, 1 minute, whatever you decide. And we align all of them as they're going through their day. And where they align is where we get edge. Edge means many things. Edge can be your psychology mixed with your strategy. Edge can be your personal discipline. So edge is a big idea. It's a big concept. This is where you get asymmetrical probabilities. We're going to go into the strategy and the trades I took today. The first of which was in Intel, right when the market opened. Actually, it wasn't right when the market opened. It was a little bit after that, clearly. We saw a volume confluence right here, a volume bar greater than the previous 3 on the right side of the momentum, aligned not with this 15-minute, unfortunately. So I made a bad trade. This 30-minute was strong and unbroken, 30-minute momentum. The 15 momentum in this case was not really going with the trade. It was still in the red, yes, but no, it's not going with the trade. This is a bad trade. If you're going to take trades like this, you might as well just enter right when the MACD starts to align instead of waiting for a volume confluence at that point. So this was a bad trade, and that ended up being a loss because we use a specific stop and a specific target. Target is this first line right here, which never got hit. And then it came back, hit the stop loss, and that was a loss on that trade right there. And then Tesla was the next one. I saw very clearly the 15-minute MACD momentum working down. We're in the 30-minute realm, we're already in the red. So, what do you see on the 3? The 3, tapering away, starts to stall. We get a volume confluence, a 2x3. And this MACD actually starts going with the trade. This MACD right here was the turning point, that histogram bar. So we entered right here at that bar, right where that yellow line is. At the close of the candle, stop loss up here. We hit our first profit target, and the price action continued going, and we hit the final profit target as well. Wonderful big trade right there, good win. Next one was on Ondas, one of the most popular stocks in the market. And here's what it looks like on a weekly chart. It's up like 2,000%. On a daily chart, here's what it looks like. And it's got a lot of momentum on an inherent basis. That's what we call inherent momentum. If you look at a weekly chart and it's ripping upwards 500%, 1,000%, then from a weekly chart, you can take that knowledge. That's true momentum to the upside. So when you go and look at the 1 hour chart, you know that you have upward momentum built in. So the moves to the upside are going to be very aggressive. The moves to the upside are going to be very common. This has a lot of inherent upward momentum. So we're looking at the trade I took right here, which was on this yellow line. Why did I take the trade? Because you see a volume confluence right here. Volume bar greater than the previous 3. We're on the right side of the momentum. I could have entered earlier. As you see, look, there was a bar that ticked down right here. This previous bar started the momentum movement, and I could have entered there, but I didn't because there was no true volume confluence occurring. Still could have entered though. Why not, right? Lower your risk maybe and enter. 15-minute in the red, tapering away, still going with the trade. 30-minute unbroken, completely unbroken, going with the trade, heavy momentum. So I took this trade. The only warning sign was the 15-minute going against it, but that's not even that big of a deal. The 5-minute momentum was in the green and hadn't yet really broken variance yet, so that was one warning. But we're not really worried about the 5-minute right now. Either way, this was a loss. Entered the trade right here, stop loss above the top of the candle. Never hit profit target, came back, hit the loss. So far we have 2 losses on the day and 1 big win on Tesla. Next trade is in the most hyped stock in the market right now. Look what happened to this. Look at the daily chart on this. Look, what do you think? We shoot up hundreds of percent. We shoot up from this overnight. We're now 200 and roughly 150 to 280%. Okay, huge overnight thing. Why? Because they have a contract with Palantir. Contract got announced, news headlines, that's what's going on. So, what did I see? Towards the end of the day, I see the 15-minute tapering off. Look at this, 15-minute tapering off. The 30-minute tapering off. We've broken variance on the 30. We've broken this level. We're still grinding down. 15-minute has crossed over. That's what we want to see. We don't want to see decreasing in the high greens. We want to see a crossover or close to the middle point. And then right here, what do we see? A volume confluence. Volume bar greater than the previous 3. We're on the right side of the momentum. That is the entry. Entry right here at the close of the candle. Stop loss slightly above. Take profit at that first level right here, which is essentially a 0.6, 0.7 R, almost a 2-to-1. It's a little bit better than a 2-to-1. Then you allow the remainder of your position to keep on going to collect more and more profits. We did. We captured the maximum profit when we got down here. That's wonderful. Absolutely wonderful. Going to the next trade in NASDAQ, where I made another mistake. A couple mistakes I made today. In the NASDAQ, I thought this was going up right here. Why? Because we have a volume confluence, volume bar greater than the previous 3. And that's it. That's what convinced me to take this trade. This 15 is not going with the trade. It's going down. The 30-minute, though it's in the green, yes, we have upward momentum. That's the only variable going with this decision. But what else do you notice? The 30-minute MACD is going down. It's tapering. It's not building and expanding. That's not what's happening. It's not building or expanding. That's not the situation. Remember, when we talked about the momentum alignment, we talked about that in terms of the MACD histogram. These histogram bars and how they move, that's the alignment. If you can get the 30-minute MACD bars going up, and then you can get the 5-minute MACD bars going up, that's already a good edge. But if you can get the 30-minute MACD bars going up, the 15 and the 5, and the 3, if you get 3 time frames stacked together, you create significant edge. Okay? So right here, the reason I made a mistake is because there's no edge here. I made a mistake. I shouldn't have taken this trade. These bars going down. That's enough to just say, no, I'm not taking the trade to the upside right now. What am I doing? Anyway. So right after this loss, because as you can see, I thought it was going up right here, and it did not. It immediately went down and hit my stop loss. So after that loss, I actually traded the same thing. I traded NASDAQ, but I shorted NASDAQ this time. And I shorted it when it got right here. We have a volume confluence. Volume bar greater than it's a 2x3. 3 volume bars, last one greater than the first, and 2 out of 3 are aligned with the direction of the trade. We're on the right side of the momentum, going down, going down. We've been going down on this. So now this is an alignment. Entry at the close of the candle, stop loss slightly above. First target was hit. Second target was hit. That's a good win right there. Last trade in the day was in Tesla. Tesla, at the very end of the day, I decided to take a trade because things were lining up to the upside right here. Right here. Look at this. Our 15-minute is building back to the upside and in the green. Our 30-minute is in the green. We're aligned with the momentum on this MACD, the 3-minute, and we get a volume confluence. Volume bar greater than the previous 3. So we entered the trade right there. Right here we entered the trade. Put our stop loss at that edge of the candle because this is a large candle. We didn't want to go beyond it. We had just stop loss right there at the edge. And that target was hit. That target was hit right there, closing out the day, closing out the week. With all that being said, I will see you in the next one. Take care now.